Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're touching base on the market. We're going to start with Bitcoin crypto because there's news regarding the SEC approving the spot Bitcoin ETF. So right now, crypto is actually pumping, but Bitcoin was actually down in the session today. It wicked all the way down to 44. Now it's trading up to 46.51. Still hasn't breached that high where we got that fake announcement, but the volume is certainly coming in. I'm still skeptical that Bitcoin is into a huge wall of resistance here on the weekly chart. You can clearly see this is your breakdown zone, big breakdown zone. TA suggests that often when you have a breakdown into a massive level, you retrace to where it broke down. So since you broke down over here, if you extend this beautiful parallel channel all the way through, we're now hitting inside of this massive resistance zone. So can BTC get through this? Perhaps, but I'm remaining skeptical because it is at some technical resistance right now, putting in some divergences and certainly seeing some sell side pressure at these levels. Now, the big talker and the strength in the crypto market is really coming from Ethereum. So it seems that the spot ETF announcement on Bitcoin has actually broken Ethereum out. Why is that important for Ethereum? Well, Ethereum is important because ultimately, if Bitcoin's getting a spot ETF approved, it likely means the next cryptocurrency to get that approval would be which one? Ethereum, the second largest one. So Ethereum certainly running off of that news as well and actually making new highs here in the trend. This is a nice bullish pattern that has broken out, and it does suggest that there could be some upside in the Ethereum. Maybe Ethereum could even push all the way up to 2880, and you could see the rest of the crypto market fairly muted. But right now, Ethereum is pumping and lifting the total crypto market cap basically to some new highs here. So if I pull up the total crypto market cap, it is performing really well, back up to 1.74 trillion on the session. So a massive move here in the trading sessions. You're actually breaking out of this consolidation range, and you could push higher here on the back of Ethereum getting some momentum here. So watch for continuation. Again, I think maybe Bitcoin is into this resistance point. Maybe BTC can push up to roughly about that 48,000 level. But I think the upside we're going to see is going to be limited in Bitcoin. Most people were piling in on Bitcoin. I think the upside is muted and limited, but more of the upside will come into the Ethereum market. So watching Bitcoin's dominance potentially fall here over the next, say, 1 to 2 weeks. But again, I'm still a little bit slightly bearish on Bitcoin, being the fact that we had that initial spike on that approval, made a couple percent higher. Now the approval has come through, and we're seeing, the price action fairly muted in the Big Daddy Bitcoin behemoth. Let's look at the SPX here just to see where we're currently trading on the charts. So just like that, after a multi-day sell-off at the beginning of the year, we're right back to the highs of the session. Now, technically speaking, it does look like the SPX wants to go for that previous all-time high price up at that 48.17 level. So as of now, the bulls are technically in control. Be mindful that you are getting that bearish divergence, which means the trend is weakening. It doesn't mean a sell-off is going to be guaranteed, but the trend is starting to weaken, and I do think that there's limited upside here. Notice the QQQ. Qs have actually bounced tremendously off that first fib zone. They filled the gap today technically perfectly, and they actually got hit pretty hard off of that gap fill. So you can see the gap fill intraday was here, and as soon as you hit that technical gap, boom, it sold off. Now you did get a pop here in the late 10-minute session there, last 10 minutes of the trading session, but as of now, the Qs I think are due for a little bit of a pullback. What's interesting is you do have the CPI data tomorrow. So CPI is obviously very influential for the US dollar and the yield market, the interest rate market. So consensus is actually expecting CPI to uptick. That's kind of what I'm seeing on the charts, with a potential bull flag forming on the dollar, inverse head and shoulders. So watching it closely, the reaction at 8:30 now. Most people are driven by the CPI headline. We actually also have employment data at 8:30 tomorrow, the initial job loss claims. Arguably, those could also be more influencing than the actual CPI data itself. Why? Well, the market can't really have too good of a number because it would also spike yields. If the labor market remains too resilient, it could spike yields and spike the dollar. But if the labor market comes in worse than expected, it also could spook fear into the market. So we're at this a little bit of an inflection point where I think different data sets are going to be more influential than others. I think the CPI is going to be more muted in terms of when we progress through the rest of these quarters into 2024. I think the CPI will become more muted, and you'll have the labor market data showing a little bit more volatility and influencing the price action and investor sentiment in the market. Let's move along to the small caps, because small caps actually finished. They closed positive. They were down all day until that last little bit of a rally, but small caps managed to basically hold and close positive on the session. We were able to day trade some small caps in the live day trading room. We were able to day trade quite a few names today, but as of now, the IWM is still holding above technical support on the daily chart. Your pivot, breakout. The fact that you're back inside of this consolidation range does open up the probabilities of a potential move all the way back down to the low end, but we need more consolidation. This pattern for the bulls, you really want it to start moving up in the coming sessions. If it doesn't start to move up, then this could be forming a bear flag. And we all know bear flags typically have a high probability, over 70%, of breaking lower. So the bulls want to see this start to perk up here and really get outside of this wide range gap down candle. So definitely notice the relative weakness in the market. Small caps really not bouncing off of this support level. The S&P 500 bouncing very, very hard, almost back to the highs. The QQQ, tech heavy sector, also bouncing almost back to the highs. So notice the relative strength and divergence occurring in the market. People are continuing to pile into mega cap tech, and the small caps are really still trading inside of this little bearish range. So that's, if you had to see the divergence, tech is all the way up here, S&P 500 stocks are all the way up here, small caps are still trading in this bearish range. So one way or another, small caps could catch up. They could play a little bit of a catch up, where you could see this bigger large cap stocks chop sideways in a small tight range. But if they don't start to play catch up, then it does mean they're likely going to see some more downside. So that would be a little bit of a risk off sentiment in the market. All right, let's move along to, let's see what else we can touch base on here. I'm just scrolling through my sessions. We'll touch base on natural gas because that's been super, super wild. I'll do a quick little free video here on nat gas. So natural gas, I actually banked with my members today. We entered a trade yesterday on nat gas. We shorted natural gas via the KOLD, the cold ETF. We did get filled on our cold ETF trade, and we actually just closed the position today for just over 9.5%, almost a 10% gain in one trading session. So that was a good session. But you can clearly see the resistance was met. That was a little bit of a blow-off move in my opinion, and I do think natural gas has a strong likelihood of actually coming back down to this 220 area and even piercing these lows. I would not be surprised if natural gas actually pierces this low. I'm still sticking to my original thesis. We banked on the long side. I wish I had this last few day move that natural gas had, but we still made profit from this low to about this resistance is 266. And then we actually just made profit on the short side very, very quickly. So I hold no position again, but I am seeing that natural gas should come back down to test these 220 lows and likely breach those lows in the session. And I would love to see those lows breached because I'm a natural gas bull. I want to accumulate as much natural gas as I can at cheaper prices. I do think in 2024, this year, later in the latter half of the year, we'll actually close this gap at 440. But I do see that we have one more downside move before the bigger basing formation breakout. On that note, thank you all for being subscribers to my YouTube channel. If you're interested in learning how I trade, definitely visit my tradingcapital.ca website, where I track insider buying and selling. I post daily analysis videos each day like this for my members, but I do a little bit more in-depth analysis, and I also, you'll gain access to all of my trade insights, direct live trade alerts. So definitely check out my website. And if not, keep tuning into this free content, as you likely will find gems throughout the year, as I often give little insights as to where I think the market is going and how I'm positioning myself. On that note, again, take care, everybody. We'll see you on the charts tomorrow. Definitely be mindful of CPI. Consensus is for inflation to uptick. Again, consensus is for inflation to uptick. And that labor market number at 8:30 will also be very, very telling. Take care, everyone. We'll see you on the charts a bit later.